Hey traders, John Howell here, and in today's video I'm going to be covering the stock market. Bit of an update on that right now, S&P and Nasdaq and the Dow and stuff like that. Also be covering silver and gold. We'll be looking at also the gold stocks, the GDXJ, and also going to be talking about the Fed rate cut of how they dropped their rates today and what that actually means on a fundamental basis to the actual markets itself. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's start off with we'll start off with the S&P 500 and the Nasdaq and all that sort of stuff. But if we come back and have a look at, this is Boeing. I've been watching Boeing a lot lately because Boeing could be getting ready for some sort of a false breakout. And if it is a false breakout, we're getting ready for a massive move in Boeing. So we haven't got that yet. So there's nothing there for me to talk about. The first thing I must say, guys, is that we're definitely getting a lot of volatility where we are right now. Again, I still see overall movement to the upside. But definitely a lot of movement, definitely a lot of volatility where we are right now. Even if we do get a little bit more of a downside from here, guys, I am not too worried about that. As I said before, over the next, say, 2 to 3 months, I do believe we're likely to rally back up. It could be quicker, it could be longer, I don't know. But by the end of this year, I'm a firm believer that we're going to be well above new highs. This high here, 29.5, and making a big run for it. So that's what I'm saying right now. And also the S&P 500, the S&P 500, we can see it's actually still holding this overall support level here. So it's still at this level of support. Again, guys, I'm still massively bullish. And you know, the thing about the market is that, I'm very confident that we're going to make new highs, but it may take 2 months for that to happen. It may take, 3 or 4 months for that to happen. Because if we get a little bit more of a sell-off through here, that's only on the short term, right? The short term, we may get a little bit of a sell-off. But by the end of this year, I see this thing well above new highs and it continuing up. So if we do get a little bit more of a pullback from here, guys, I'm not really worried about that myself. Again, guys, what I'm talking about here is I'm talking about me just looking at the markets and me analyzing these charts here, okay? But the way that I trade the markets, right? So I have my investing type of positions, which is about 10% of my trades, and 80 to 90% of my trades is actually trades that actually meet my trading plan that I don't talk about on YouTube. And me and my private clients take these trades and so on and so forth. So as you can see, right, like what I put out here on YouTube is just basically a general market view of what I'm seeing from the market itself, right, from the charts itself. But most of my trading is done when it comes to my trading setup. Now, if you'd like to learn my trading setup and how I trade the markets and how I scan the market and why my trading system that I trade is the highest probability trading system on the planet, I'm going to talk you all about all the details. I'm running a free training today, so very first link in the description, go click on that and go register for that free training. And I'll walk you through all the details to my trading system of what I look for. And put it this way, my system is so powerful that once you get a setup that meets all the rules, it's very hard to find a trade that doesn't make a profit, and most of the times a very nice profit. So very first thing in the description, click on that. Join me on my free webinar, web class, whatever you want to call it, today. So same for the Nasdaq as well too. The Nasdaq is pretty much, if we zoom the Nasdaq, we can see, let me delete this here. We can see the Nasdaq is still pretty much way at those levels of support through there, as you can see. So we're really at this level of support. We did actually come down to this level of support as well too, pretty almost about that level through there. So really sort of supporting it right where we are right now, guys. And we can see that again overall, even if we do get a little bit more pullback, guys, short term we may get a little bit of pullback, but you watch this thing, guys, all-time new highs is on its way. So moving on now through to silver and gold, I want to start off with gold, and gold has definitely had a very nice move. We're still in a very nice upward trend from here. So gold has definitely had a very nice move to the upside today. That actually had a lot to do with the Fed rate cut. I'll talk about that in just a minute. And also moving on through to silver. Silver's pretty much been doing nothing for quite some time now. We can see that we actually add a bit of support level through here. And this is major resistance up through here. So we're in this very overall sideways channel where we are right now, and it's been like that for quite some time. So what we want to start to see for silver to start to get a bit more bullish is we want to start to see this silver getting back above this 1750 level, because that's that level. If we break back above 1750, that's when I see we can start to head our way back up and probably break this resistance and then continuing up from there. So that's what I'm seeing there overall on silver. But once again, really, silver hasn't been doing much at all. Just a very very lackluster sideways channel there, and really not much going on through there. So really interesting to see what actually happens here with silver. Moving on now through to GDX. Again, the GDX has actually been one of those things, right? Look at this here. Just came down to support. We've got this major resistance up through here. I really thought that when we get this breakout, we'd probably like to start to see a very move up. Look at this thing just completely shot up through here. And when it shot back down through here, this here was a false breakout. This point through here, if you were long, was a confirmed false breakout to the upside. And when you understand false breakouts and channels, when the false breakouts happen, it runs to the opposite of the channel. So if it's a false breakout to the downside and we get back above it, we're likely to run to the top of the channel. If the false breakout to the upside, we're likely to run to the bottom of the channel. So the charts are operating exactly the way that a false breakout happens. And same for the GDXJ as well too. GDXJ came up through to here. That was a resistance that ran straight up, came back down. As soon as we actually got back below this level through here, this whole level here was just one false breakout. Once again, once we do get the confirmation of false breakout, then it's likely to run to the opposite of the channel. In this case, it was a bullish false breakout, and so it's a bearish reversal, and now we're likely to come to the bottom of the channel, and that's exactly what it did. So that's what I'm seeing through there right now, guys. On the GDX and GDXJ. I think overall, guys, we're really getting set up to have some nice moves in silver and gold, but you guys must be patient. You guys are so like, oh my goodness, nothing has happened for 2 months. Like, if you're looking for investing type of positions and you're getting into like GDX and GDXJ and hoping for a bull run and nothing happens for 2 months, you guys have got to be patient. Like, calm down, seriously. If you want something to move straight away, then you need to get into a good trading opportunity that moves pretty quickly. It may not, like with the way that I trade. Again, first thing in the description, the way that I trade, it's like, I get into it, and most of the time it's going to run on pretty quickly. Within a few days, that thing is actually moving in that direction. If you're just getting into a long-term trade, which means you're trying to buy and hold for a big bull run over the next 12 months, but then you're freaking out what's happening over the last two weeks. Like, you see how there's incongruency there, guys? Be congruent with the way that you position yourself in the markets. Now, I want to talk about the Fed rate cut here. Everyone keeps talking about how this is so bad for the coronavirus, is so bad for the economy, and so bad for the stock market, and this is the top, and blah, blah, blah. And even one guy, you know exactly who you are, saying we're not going to get to 29,000. Even if we do get a little bit of a pullback from here, and we get a little bit of a pullback, 29,000 is very high probability. Not only is 29,000 very high probability, but way above 30,000 by the end of the year is massively high probability by the end of the year. And same for the S&P, right? I actually have a target of 3,600 by the end of the year, actually above 3,600 by the end of the year, but 36 minimum on a minimum basis. That's where I'm at right now. So guys, on a fundamental basis, a rate cut is a support to the stock market, not a dampening to the stock market. The stock market's not even in a bear market. It's actually just had a pullback, and it's just erased what's happened for the last 3 or 4 months. Like, it's not like it's erased what's happened in the last couple of years, let alone the last 10 years. It's like, we're still in a big bull market. We've actually just had a nice pullback, and now that's where we're at right now. So the Fed rate cut that's happened recently, that's actually a support to bullishness in the market. It's not bearishness, guys. Stop thinking this is the top. Then we're nowhere near the top right now. Okay, again, short term we may get a little bit of pullback, but over the next 2 or 3 months, you watch this thing's probably going to pick back up again and race back up to new highs and continue up, and you're going to go, oh my goodness, I didn't see that coming. Yes, you did. It's all over the market right now. It's right in front of your face. Stop being so biased in this market. Look at the facts for what it is. We're in a big bull market. We're just having a very nice pullback. and then suddenly we've just got a rate cut just recently. You know, it's something that is that when you're trading these markets, guys, just please remove all this other crap and thinking the coronavirus, which the deaths from a coronavirus is like 1 or 2% of what the normal flu does per year. There's, you know, it's like, if the coronavirus was that bad, then the facts there, right? Look at the facts and stop taking the media bullshit and face value and look at the fact. Oh my goodness, coronavirus is so bad. Yeah, well, if that's bad, what is the flu? What is a heart attack? Like, you know, look at all these other big diseases that kill people every year, and they're going to compare that to coronavirus, which is like 1%. Like, how many deaths have there actually been of the coronavirus? And how many deaths do we actually get reported from the flu every year? See what I'm saying there, guys? And then now we're still in a big bull market. We just had a pullback, guys. Over the last month, we've had a pullback. But like, even with the Nasdaq, look at this Nasdaq. Is there anything wrong about this Nasdaq? No. What have we done? We just had a run, and then we just had a very big pullback. There is not one thing that says this is not a big bull market. Because what actually happens in a bull market? What happens? We go for a run, then we have a pullback. We go for a run, then we have a pullback. That is a bull market. Go for a run, have a pullback. Go for a run, pullback. Go for a run, pullback. Go for a run. See what I'm saying there, guys? So remove all this emotional bullshit on a short-term basis and stop focusing on charts that look like this here. And like, oh my goodness, it's a dropped market. It's in a bear market right now. This thing is the top. It's going to crash, blah, blah, blah. Yes, on a short-term basis, guys, we may get a drop down here. But seriously, look at the facts from everything I've just said here. The numbers of deaths from the coronavirus to just the normal flu. Them dropping interest rates. We're still in a big bull market right now. We're just having a very nice pullback. Look at this Nasdaq. There is nothing, absolutely nothing bearish about this Nasdaq. We've just had a very nice sharp pullback in an overall big bull market, one after breaking out through here. If you're calling top, that is just an absolute gamble. And now with the Fed actually dropping rates, that's actually a massive support to a massive blow off. And the top will come in once we get a massive melt up. And that's probably over the next 1, 2, 3 years, guys, we're going to see this thing absolutely just take off. We're going to have a melt up, a blow off, a massive blow off. The stock market will go over the next couple of years. Again, short term, I don't know what's going to happen. Short term, we may get a little pullback. But long term, guys, oh my goodness. Get ready. Right? That's me on my horse. And guess what, guys? I'm already positioned right now for that. Right? I'm already positioned right now for that move. I have 2 different types of options I've just recently bought. One is more of a shorter term option, which is like, I think it's a June option. So I got about 5 or 6 months roughly around there. So February, March, April, May, June. So about 4 months. About a 4-month option there. And then I have one with many years when it comes to the SPY. Why? Because of exactly what I just said. We are getting ready now for a melt up in the markets over the next 2 to 3 years, guys. Not day one, not tomorrow, but over the next 2 to 3 years. And if you're looking for, and if you position yourself like I am for more longer term trades, you must expect that we're going to get some form of pullbacks every now and then. Okay? Big bull markets have big bull runs followed by pullbacks. Okay, guys? Now, when it comes to the Fed actually dropping rates, that's also bullish for gold. That's the reason why gold actually had a very nice move to the upside today. Because it was like, as the Fed cuts rates, that's even more of a support to gold. So it's crazy because this is actually supporting gold because, you know, especially if rates go to zero, gold's going to completely soar. Gold's been completely soaring for quite some time right now. But get ready for a big move up, right, guys? Because this is just not a big move up, but the more they actually drop the rates, the more this thing's going to absolutely just take off. And so gold has already been in a big bull market for quite some time, and we're still in this big bull market right now, as you can see, right? So I wouldn't be fighting that at all. And the same for silver, but silver's actually a bit more of a lackluster thing here. We've actually been going sideways through here. I definitely would love to see if silver breaks to the downside. Well, then we've got to start to see, okay, is it a false breakout? There's a couple of different scenarios that I'm seeing with silver right now. This is short term, guys. Long term, here we go. buckle up, get ready for a big bull run. Not today, not tomorrow. Big bull run means like if you looking at where you are right now, project yourself 2 years from now, look back. That's when we start to see the bull run. What I mean by that is that who knows when that's really going to kick in? It could be 1 month from now, 2 months from now. I don't know. I know I'm just positioned. I'm ready for when it does happen. Short-term basis, who gives a shit about this pullback? But let's have a look at this here, right? There's a few scenarios that's happening here right now. Firstly, is that silver's been in its very, very, very deep sort of channel through here right now, and this is where we're at right now. So there's a few things that is likely going to happen from here. The first thing would be more like of a false breakout scenario, where the market does come down through to here, and then drop back down through to here. If that does happen, and then we start to get a reversal, we get reverse back above this resistance level here. This here would be a bit of a false breakout. And then we would run to the top of the channel, right? Just exactly like I explained, like GDX did and GDXJ did and so on and so forth, right? That's how false breakouts work. So that's scenario number one. If we do get that, I'm not saying if we do get a drop down, I'm not saying it's definitely going to be false breakout, but that's where we need to watch, right? Okay, is it likely to be a false breakout? If it is a false breakout, then this is where it's likely to go. Or scenario number two is we do nothing from here and we actually start to break up and above this mid-level range, which is the 1750. We get back above this level here, and if we do, that's when we have a very good chance of running back to the top of this channel up here and then continuing from there. And then once that happens, then we're probably likely to start to see a very, very, very nice move up. Especially, guys, if I bring up this view here, especially now since that we've actually got on all this, what's that? 1, 2, 3, 4, 5, 6 months, over 6 months worth of sideways movement. That equals, once we do start to heat up through here, that equals a very, very nice move up. And on a projected level there, guys, how you use this level, is once you find a bit of a channel here, like we have, you measure from the high, like we have here, and you measure from the low, project that up from there to there. Okay, and then we bring this channel over here like that, bam. Now the interesting thing is, right, that's just basically what we call a channel projected target. This is where it's likely to get to. The interesting thing is this top trend line up here around that sort of 2021 level. Here's the interesting thing, right? It's a very, very simple target. If I squeeze my chart up, look at that level. That target is actually right at that resistance level. Coincidence? I think not, because that's how these levels work, right? So we need to the long-term view, we got that in place. Shorter-term view, we just got to take it day by day, see what happens, and respond to the market. And once we respond to the markets even more, then we can see exactly what's setting up right now from this on a short-term basis. Silver is still very, very, very low on a low-time basis. So even if we did get a bit of a pullback, guys, silver's probably not going to go through a massive crash or a massive bear market. We're still down here, and we're not going any lower than these levels through here. So this is actually a very, very, very bullish breakout, guys. And once again, we have definitely broken out of this overall long-term down move. And now we're just holding this level of support. That's a long-term sort of trend line there on silver. Let's go back to the silver basis. So as you can see, right, I just did a very simple channel projected target. And the coincidence thing, there is no such thing as coincidence, is that level through there is now the resistance level for that there. So I hope this helps you out there, guys. There's two different scenarios that you want to do with the way that you're positioning yourselves in markets. If you're just getting in because you see this market having a big bull run, firstly is that don't risk a lot, okay? That's why I love trading options, because I can say, okay, all right, I'm going to put 2.5% of my account on this one position and 2.5% of my account on this one position. And if I'm completely wrong, well then I'm basically risking 2.5%. But if I'm right about this position, then that 2.5%, what is that? So what's the word for it? That's what I was thinking of. So that 2.5%, you think about this, right? That 2.5% could potentially, that 2.5% risk on your account if it's positioned right, that could potentially lead to anywhere between a 10 to 15, even up to as 20 or 15 to a 25 to 30% return. If you got like say 1,000%, say 1,000% return, makes sense. So the thing is that, or a lot more than that. So the thing is that, as you can see, right, that's the way that I position these types of trades. Is I like to risk real small, but then think about that, guys, for a minute, okay? If I have 2.5% of risk on my account on a position with options, and say in 6 months time frame, at 6 months time frame, or 7 or 8 months time frame, it pays off. And then now from that 2.5%, my account is up 15%. Do you see how that's smart investing? So, but then the way that I trade the markets, I'm much more active in those things. So I can protect my capital a bit more. And so I'm happy to put a bit more money on per trade because it's an exact rule that I'm looking for. And as I said before, very first thing in the description, that if you see a trading setup that meets all my rules, it's so hard to find a trade that doesn't run on for a very, very, very good profit. And our very last profit that we made that met the rules was APT. This one right here. I know one guy out of my private client group, I picked up 600% return on this trade here recently. He picked up like 3,000% return. So it was absolutely crazy from there. But that's the type of thing, right? That's the type of thing we're looking for. Again, link in description, you'll be able to see all the details to my trading system. And once again, guys, please be smart about the way that you're positioned with these markets. And I had this guy named, I think it's Peter, on my YouTubes. He's trying to pick, say, oh, John, you didn't get this, you didn't get the silver and gold core right, and all these sort of things. Traders, it's not about being right with the markets, right? I'm not going to be right 100% of the time. Now, granted, if you look at all my calls that I've made just on YouTube, right, just on YouTube alone, again, most of my trades are done just from a trading system, which has a high massive success realized ratio. If you look at all my calls that I've made just in the last 12 months alone, you'll see that probably 80 to 90% of the actual things that I've called out on YouTube has actually happened. But it's not about being right or wrong on the markets, right? Because not every single thing you see is going to generate a profit, right? So as I've said before, you want to position yourself, especially my sort of investing type of positions in here where I'm looking for a move and it may take a lot longer than I thought. Right, and that's the best thing I can do is buy more time in these options. So I'm risking 2.5%. And so if and when these things actually do start to play out, I could be 50-50 right in my calls, in my longer term calls. And if I place and 50% of the trades are actually losing 2.5% of my account, and then say the other 50% of the trades are averaging even 300% return. Do you see how that I'm setting the game up to win on my side? And that's how you look at it. Don't try to position yourself to make a lot of money on one trade at all, because that's not the way to go. There's so many opportunities out there. Be smart and think about where you want to be at the end of this year, because making big money on any single given one trade is not the way to go. Yes, we would all, like, for example, the APT trade. Yes, I would have loved to load up 100% of my account on that trade, but I didn't know that was going to do 600% return, right, on that trade. Now that was an investing position, so I had a lot more. That was a trading position, so I had a lot more money on my account on that. But that's a different story. Anyway, guys, I hope you can see what I'm saying here, guys. Firstly, just to round this up here. We are getting on the premises of a massive melt up over the next few years. Now the government has actually dropped rates. That's actually bullish for the stock market and gold. So they're both likely to keep going up. And silver's probably likely to follow as well too. But silver's a bit of a wildcat. So nothing. We talked about silver today. And then secondly, guys, stop trying to be right with the market and just make sure that when you are trading the markets, just position yourself smartly. So you're risking small to make big, right? Because that's what it's about. How to risk small to make big. And how you do that with options. And how you do that is, one, you buy enough time. So for example, if I see the SPY probably likely to make a move, I would buy a minimum of 12 months worth of time I'll be buying out of the money options and I'll be placing 2.5% on my account on that there, and then just letting it go for the rest of this year, you know, for at least 12 months. And over the next 3, 4, 5 months, we're probably likely to go for another big bull run. And when that happens, you can start to close out your position and go from there. Or you can go buy 2 years worth of time, go a bit more out of the money. And, you know, again, put 2.5% of your account on that trade. If the trade works out and it plans out, you know, you could pick up anywhere between 10 to 15% on your account. If it really works out, then you could be a 25 or 30% return on your account with a 2.5% risk. See what I'm saying there, guys? So trade, please, guys, when you're trading these markets, risk small, but then have the potential to make big. And that's why I love trading. I love buying options for that reason, because I can risk small. I can have a small risk on my account with the potential to have an enormous profit on my account from a small risk.